Welcome. In this video is Xcn coin in the support zone. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we take a general look at the chart, we can see that the price is currently positioned at a highly critical level. This level corresponds to a well-defined support line that has been tested multiple times in the past and has held strongly each time. Especially such horizontal or sloped support zones are areas where investor buying interest tends to concentrate. Therefore, the price reaction at this level can significantly influence not only short-term movements, but also the medium-term trend direction. Looking at the current price action, it appears that the price has touched this support line following a decline, but has yet to make a clear directional decision. However, if a positive reaction, namely an upward bounce, occurs here, it would generate a signal that is encouraging for the market not just technically but also psychologically. Upward movements from such support zones often increase buying appetite and cause many technical indicators to simultaneously turn positive. It's also worth noting that this support level is not just a horizontal line. Due to being tested and holding multiple times in the past, it has now become a demand zone. So, a potential upward reaction from here would be more than just a bounce. It would be a strong signal that investors are recognizing this level as a bottom. This, in turn, could pave the way for the beginning of an upward trend. If the price fails to hold at this level, it may seek new support zones further down, which raises the possibility of a short-term decline. However, the fact that the price is currently pausing at this level suggests that the market is taking this line seriously and is expecting a potential reversal here. If an upward breakout occurs from this area with volume support, it is highly likely that the price could start another upward rally. Such support levels are generally viewed by investors with the mindset of buy unless it breaks. In other words, prices pulling back to this point often find enough buyers to move back upward. Therefore, a reaction that might occur at this level could not only halt the current downtrend, but also lead to the start of a new buying wave in the market. Finally, assuming this support line coincides with an important psychological level in technical analysis, the potential strength of any reaction here would increase even further. In such areas, both retail investors and large funds tend to reassess their positions and may show a tendency to initiate reactionary buying. In short, the price is currently at a very critical and technically significant level. If a strong reaction emerges from this area, it could go beyond just a short-term correction and potentially mark the beginning of a new upward wave, but we need to consider more than just trends. We should also pay attention to other metrics. Keep watching. When closely examining the current price action within the framework of Elliott wave theory, it appears that the market is currently positioned within the second wave. This second wave is typically considered a corrective movement and represents a relatively sideways or downward motion following the impulsive upward movement experienced in the first wave. The most notable feature of these corrective waves is that they reflect periods of investor indecision and a kind of waiting phase in terms of directional clarity. However, there is a critical point to pay attention to here. For the Elliott wave structure to remain valid, the price action must never fall below the starting point of the wave, known as the zero level. In other words, if the price drops below the point where the first wave began during the second wave correction, the current Elliott sequence becomes technically invalid and the analysis must be reset. This would mean a violation of one of the core principles of the theory. The second wave cannot go below the start of the first wave. On the other hand, if the price manages to stay above the identified support level during the current correction and does not fall below Elliott's starting zero level, then the technical groundwork for the third wave is laid. The third wave is considered the strongest, longest, and most volume-backed wave in Elliott wave theory. During this phase, the market typically gains momentum and upward movements accelerate. This brings about a period where more aggressive buying strategies based on technical analysis can be considered. For this reason, the current movement of the price is of great importance to investors. If the price consolidates for a while, as is characteristic of the second wave, and then breaks upward with supporting technical signals indicating the start of the third wave, it can be said that this upward movement could become significantly stronger. However, if the price drops below Elliott's starting point, the current wave count loses its validity, and the analysis must be restructured from scratch. Therefore, the level at which the price is currently positioned represents a very sensitive and decisive zone. Determining whether the second wave has ended requires evaluating not only technical formations, but also trading volume, momentum indicators, and trend confirmation tools together. If a strong reversal occurs from this area, it will not only trigger the third wave, but also provide a significant signal in terms of clarifying the overall market direction. In this case, the best option would be to wait a bit. The RSI, or Relative Strength Index, is one of the leading technical indicators frequently used by investors to measure the strength of momentum in prices and to anticipate potential trend reversals. In the chart we're currently analyzing, one of the most notable formations on the RSI indicator is a clearly downward-sloping trend line that has consistently formed lower peaks over time. This line connects the RSI's high points and acts as a resistance structure against upward movements in the indicator. Such a descending trend line is a reflection of investor psychology and technical analysis. Each failed attempt to rise on the RSI shows that market participants are losing strength and that buying pressure is diminishing. This indicates that investors are increasingly willing to sell at lower levels, meaning risk appetite is declining and profit-taking behavior is prevailing. Therefore, this descending structure observed on the RSI represents not only the direction of the indicator itself, but also the overall market sentiment, the flow of liquidity, and the persistence of technical weakness. However, in technical analysis, what matters most is not how long such structures last, but when they are broken. If this descending trend line observed on the RSI is broken to the upside with strong buying momentum, it becomes a highly significant technical development. This breakout is not just seen as a temporary upward spike in the indicator, but as a sign that the market is entering a momentum revival phase. If the RSI breaks this downtrend and gains upward momentum, it means that investors are starting to take new positions, buyers are becoming stronger, and prices may accelerate their upward movement by benefiting from this renewed strength. Moreover, if this kind of RSI breakout occurs especially above the 50 level, it serves as an even stronger confirmation signal. The 50 level on the RSI is a threshold line for many technical analysts. Staying below this level indicates weak momentum and a bearish bias, while staying above suggests the market is gaining bullish momentum and positive sentiment is building. Particularly, a breakout of the descending trend line followed by a move above the 50 level on the RSI is interpreted as a very strong signal that a new upward wave may be about to begin in the market. Following these developments, parallel movements are usually observed in the price chart as well. Momentum-based leading indicators like the RSI do not follow price action. They tend to signal changes in advance. This kind of breakout in the RSI lays the groundwork for investors to open new positions and restores confidence in the market. With buying appetite increasing, volume rising, and prices testing higher levels, new resistance levels become targets, and the trend direction clearly shifts upward. To summarize, the upward breakout of a descending trend line on the RSI is of great importance in terms of potential changes in price direction. It's not just a technical structure, but could also be a sign of a shift in investor psychology. If this breakout occurs, a positive change can be expected in both the RSI indicator and the price chart. For this reason, closely monitoring this formation on the RSI is critical for spotting short-term opportunities and anticipating larger trend reversals in advance. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.